Artificial intelligence is a big topic, but it's not just a buzzword. Companies are using artificial intelligence to transform their business models. It's really changing society. We sat down with Mike Winston, who's the founder of Jet AI, and talked to him about how Jet AI is using their optimization algorithm to help people save money and also to save the planet. Let's hear what Mike Winston had to say. Hello, Mike. Welcome. This is Mike Winston from Jet AI.
Thanks for having me, Joe.
No problem. It's great to have you. So, why don't you give our viewers just a quick background of you and the history of Jet AI, how it came to be?
Sure. I mean, I was a Wall Street guy for 15 or 20 years, and then 5 years ago, founded Jet AI. And it sits at the nexus of private aviation and artificial intelligence, where we're trying to apply AI technology to private jets. We actually operate aircraft here in Las Vegas, so we're in the business. We have 4 aircraft here that we have customers, and charter customers, jet car customers, fractional customers flying on today. Um, But the world kind of ran out of airplanes. We only make about 650 private planes globally each year, and there are only 29,000 ever made in the history of the world. And about, let's see, about 20,000 of those still exist. About 17,000 are in the U.S., where 80% of all private jet hours are flown. So it's a $400 billion marketplace, and we actually serve that marketplace directly, which is a mature cyclical business. And then we also have software, which is the AI component of what we do, which is certainly higher multiple than aviation, and faster growing just because the market for AI is rapidly expanding. And we've taken a very focused approach in that we're trying to bring that technology to bear in something that we know. Um, a number of AI companies, in our view, are who you got to go compete with the Googles and the Microsofts of the world with their large language models and their astonishing resources. We're much more interested in taking that technology and related to AI technology, and making revenue with it in what we do. So that's the quick take on us.
Is it scalable considering like the hardware component, or who are your competitors, or what's your plan to scale this to make it from, I mean, you've done an amazing job starting from nothing and getting it to here. What's the game plan to take it like to the next level?
I think you look in two areas. One is you look in aviation. The second is you look in software. And you look at the addressable market in both of those places. Then you ask, how are we going to deploy capital into those addressable markets, right? So let me take that in two parts. The first is in aviation, where we've disclosed an LOI with Bombardier for the acquisition of Challenger 3500s. And those will take a year and a half to 2 years to get delivered because of the backlog in private aviation overall. I mean, any of the four or five major manufacturers have about a 2 year wait list, which gives you a sense of the demand picture for these aircraft. Um, really, any significant private aircraft. Um, so that's an order that's in the range of 150 to 250 million dollars. And you then fraction those where you make a gain on sale, and then you can operate them where you operate them profitably. And as you scale, they become more profitable. So when you think about our ability to demonstrate the earnings power of the business, one way is to take in a whole bunch of plant, to sell that plant at a margin, and then to operate that plant at a margin. And given where our market cap and our enterprise value is relative to that kind of capital opportunity, we think that enterprising investors will examine that and say, well, is it dilutive or is it accretive? And they'll need money to do it. Where are they going to get it from? How are they going to get it? So I'd focus your attention there, from in the bull case on the aviation side. Um, and I can't say more about whether the financing for that fleet deal is dilutive or non-dilutive or accretive or however you want to think about it. But I can tell you that's one place to spend time. That's where you look. And that, of course, is a $400 billion market and hundreds of millions of plant. That's a big enough opportunity for us, I think, as far as the long side of the story goes. Um, on the software side, we focused really in two areas. One is on the B2C, which is our Charter GPT app. So there are 500,000 charters booked every year in the United States, about 1 million legs, if you could think of it that way. And nobody's really taken significant share in it ever. There's nobody who has like high single digit, market share. It doesn't exist. And we think that with AI, with the Charter GPT product, which is basically an app where you can talk to it ask it questions, and it'll kind of fill you in, and you then book an airplane with it, because most people have no idea how to book a private jet. We think that there's an ability to take some share and to hold that share. Classically, when you open a brokerage in private aviation, it grows, the brokers leave and take their books of business with them, and then you don't really have a business. But we do believe that AI will be able to retain some amount of that, and that by properly incentivizing brokers, you might start out at a run rate of a lower margin than if you kind of went for it all, but you get the brokers to actually stay, right?
Yeah.
It's interesting for them. So in brass tacks, when the average person can book an agency charter, about maybe 2 a day. With AI, if they can get to 5, we're heroes, and the model looks great in our view. So on the B2C side, the market is about, let's call it 6,500 an hour for a private plane. The average charter is about, well, actually it's about 5,000 an hour. The average charter is about 1.2, 1.3 hours, so it's about a $6,500 leg, if you think of it. And there's a million legs, so it's about a $6.5 billion market. Not so hard. The margins are 5 to 10%. So you're looking at a profit pool of between 650 and 300 and some odd $1 million. So $306 million approximately. So 1% share is $3 to $6 million, of very high dollar margin revenue. Um, and our market cap is small even compared to that number, but yet it's approachable. And when you think about, well, what is 1%, and you can kind of calculate it out, I think it might be 10 or 12 charters a day. I mean, we're booking, you know, 1, 2, 3, 4, 5 charters a day as it stands now. So in order to get to that share, we're fairly bullish. We think it's an attainable goal.
Does the software optimize the market beyond your own planes? I mean, is it going to act like a broker maybe in other private aviation markets, or is it only just expanding your kind of organic business?
Well, there's two other areas that we focus on, which are, B2B instead of B2C, right? And I think that's to your question. So the two other products we offer are what we would describe as the magic bullet for carbon removal. In Europe right now, private jets are taking a lot of flack, and occasionally you'll see in the U.S. a Twitter about tweet about Taylor Swift using her Falcon aircraft. Um, the product's called Dynaflight, and it removes carbon from the atmosphere. Or more specifically, it sells a carbon removal credit through the Puro.Earth platform, which is a majority-owned NASDAQ um, organization that all it does is vet carbon removal credits, not offset. Offset's a big fraud, I think, but removal is the real deal, particularly through Puro.Earth, which is, again, majority NASDAQ owned. And all they do is they vet projects and they sell retirement recording service. So there are 40 projects at any given time. Effectively, when you integrate with Dynaflight, we look into your system, we see how much you flew, we send you an invoice at month end, you pay the invoice, and then the serial number of the carbon removal credit is recorded on the invoice, it's marked, paid, and stored in our system. So you have a chain of a title, you have an audit trail, and you're basically everything that comes out of the tailpipe is buried deep in the cold earth, along with objections to things coming out of the tailpipe. Um, so it's received a lot of interest. This past week we were at a conference in London, and man, it was top of mind for a lot of people. So that's the first B2B product. There's a second B2B product, but let me take a break and see if you have a question.
Okay. No, that's good. You answered it. Uh, yeah, tell
So
me about the second product.
yeah, I didn't size that market for you, so I don't want to get away with that. I'll tell you that private jets overall do 18 million tons of carbon emission each year. United American Airlines, for example, does more than double that. So all of private jets, are less than half of American Airlines in a year, just to be clear. But you look at 18 million tons. If we charge a margin, a little transaction fee when the retirement is recorded. Pure.Earth charges a percentage point for that. We charge a little bit on top of that, and then there's sometimes an opportunity to sell the carbon removal credit at a small markup. And we'll see what the market will bear. But I can tell you that if you buy what is effectively a forward, right? So if you can offset in January but not take delivery until December, you can often get that credit for significantly less, and that represents a prospective profit margin for us. So if we made, for example, $10 a ton, and we offset, a million tons, that's $10 million to the bottom line. Um, if $10 is too Tony, too rich, and it's $5, great. But you're looking at a credit that's between $50 and $100, sometimes as much as $250, depending upon the project. And right now the offset market's about $25. So removal in its best case right now is twice as expensive as offset, but it's legitimate. And
Yeah.
so we're finding that the transaction fee plus the margin opportunity make for a really interesting bull case, for the stock. If you sort of think about, well, the charter market is this big, and every point is 36 million cash flow, and the offset market is this big, and every ton you do on $10 is $10 million, and the aviation market over here, like we talked about earlier, where you make a gain on sale and then you make a run rate basis, and we didn't talk too much about those numbers, but we know they're big, and that leaves kind of the last piece of the puzzle, just kind of bringing it all back to B2B software, right? So we sort of had planes over here, Charter GPT and B2C over here. B2B, we have carbon offset. And then finally, we have reroute. Reroute says, okay, if you're a company and you have an empty leg, which is a deadhead, if you're familiar, because when you
Yeah.
charter a plane from New York to LA, you pay for the way to there and the way back because it's not your
Right.
plane. It's got to go home. So to the extent that the broker who's involved can turn to another party and say, hey, guess what? I have a flight from, LA back to New York. What do you want to pay? He's double dipping.
Yeah.
He's making a fortune doing it. So if you find that ideal person, that's great. And that matches. But what if you have someone who wants to do this? Well, that doesn't fit at all. Forget that. That'll never work. But what if they want to do that? They want to go like from Philly to LA, or they want
Yeah.
to go from Philly to Scottsdale, or so there's a certain threshold which will still work. And so what Reroute does is for free, you input your inventory as an aircraft operator, right? And there are about 2,500 or so operators of size in the United States, 5,000 total. Uh, you know, uh, uh, 80% have fewer than 10 airplanes, and 60% have fewer than 5. So they're necessarily small. So they don't have fleet optimization software like this.
Yeah.
And they put their tail numbers in and they put their empty legs in. It's very easy. They just upload a CSV, or the key them in, as the case may be. And of course, if they post them somewhere else, we use AI to scrape them off the internet. So we have all the empty legs that have been posted all over the country scraped and put into the system. It will show them what their tail numbers will do, how they can modify, and it'll let them price it. That's the tricky bit, is knowing what the airplane costs to operate and to land and to take off, because you use the most fuel on takeoff, right? And there's a cost every time you land, because there's a fee usually you'll pay for maintenance for the landing gear and some other things, a so-called cycle cost. So we know those figures, and it tells them that that's how you reprice it, and it's fast, and you can move a little slider bar depending on how greedy you want to be. If your inventory doesn't fit, if your planes won't do it, we show you every other plane in the country that could, and then we become broker's broker. And how we get paid is as broker's broker in that instance. So it's free to you on your planes. We don't expect to be paid for that. But when you want to use somebody else's planes to make a whole bunch of money filling an empty that's been rerouted, yes. And that's it. That's everything.
Yeah. That's super exciting. That's valuable. That's the algorithmic optimization of a complex system, but it's not so complex for a computer. That sounds exciting. I mean, like an investor, that's something that, because that's what guys were doing manually by hand, 30 years ago, and
Yeah.
making good money, but they were probably leaving 80% waste in the system because a human can't possibly
Yeah.
track thousands of flights.
Yeah. Just intuitively, if you think about paying money as a customer or as an operator every time an airplane flies to bury the carbon, well, gosh, reroute prevents a ton of fuel waste if you think about it. Forget about offsetting. How about
Yeah.
just not wasting the fuel to begin with?
Right. Yeah.
I'm going to take a 25,000 pound airplane in LA, and I'm going to fly it to New York, and it's going to land weighing somewhat less than 25,000 pounds because all the fuel on it. I can either put a person on that, or simultaneously somebody can rent another plane in parallel that does the same or similar route. It's
Yeah.
bonkers. So reroute solves that.
Yeah. That's a very compelling bull argument. How you can kind of leapfrog over the competition. There's a story about Walmart that's similar in the 90s, before Walmart became sort of the huge company it was. They invested hundreds of millions, which was a lot in that time, in supercomputers, and did something similar. And they optimized their store layouts, shelf space, including with the price, that they would maximize, they would maximize and optimize how much somebody would spend compared to Target and Kmart and whoever were their competitors. and they started using that to make their own products. And they would take like, what's the best selling pizza? Well, how can we exactly replicate it but make it better and cheaper? And it was this algorithmic optimization, and they became the biggest company in the whole market. And
Yeah.
so
mean, we're big fans of asymmetric risk reward. We're big fans of big addressable markets. We're big fans of upside. And, when I think about our opportunity set, we really have carefully tried to get ourselves into businesses and activities with the ability to deploy incremental capital at high rates of return. you know, in the fractional market, you're making money every time the airplane flies. You're making money if the airplane's just parked, and you're making money the day you sell the fraction. You're making money every single time, and the customer's writing the equity check, so there's no debt or leverage to the business. You'll look at companies such as Wheels Up, which are very levered because they own all the airplanes. Then you look at companies like NetJets, owned by Berkshire Hathaway. All the customers have written equity checks for the airplane. Big difference. That's our model, because NetJets has gone through long and hard experience. There were years when Warren Buffett had to write a $500 million check into NetJets to keep it going. There were years when NetJets had $2 billion or more of debt. Now NetJets has no debt, and nobody's writing checks into it because they have gone and done the hard work of figuring out the model.
yeah,
We're talking about 5 to 10 aircraft here. So, that NetJets, I think, has 700. So there's plenty of room in the market for us,
yeah,
to compete and to not, be disruptive. And there are people who, don't necessarily want NetJets. And I think, sort of the way that we win there is on price, but there's still plenty of room even on price, right? And the second is on very personal service, because we are a smaller and growing company. And that's actually how we've thrived so far. Because remember, we're not just ordering airplanes out of the blue. As a company, we've already taken $25 million worth of Honda jets and successfully executed and sold them into market. So we know how to do this. We picked the Challenger because it's a true coast-to-coast aircraft and it's suitable for fraction, whereas the Honda, wonderful as it is a regional product. And it's funny, you've actually seen Wheels Up, which has gone through some significant trauma, get back to a regional model, breaking its business into two pieces because they did overreach by their own admission initially. So I think we try to keep our expenses tight and our customers happy, and then demonstrate the earnings power along each of these four areas, and and let the bulls win out.
that's awesome. So where can people learn more about Jet AI, and or what's the stock symbol if they want to invest?
Sure, it's JTAI. It de-SPACed, so it went down a whole bunch, like 95% of all things that de-SPACed. It's in our view, it's largely been tarred with the same brush, independent of its earnings prospects. So I think discerning investors may have an opportunity here. Um, you know, I, I was an investor for a long time, and I used to look for stuff like this. So I'm kind of pulling for the investors in everything we're doing as a company, trying to make it easy. And
Yeah,
the
public.
website, of course,
What is it?
jet.ai.
Yeah, okay, that's good. Yeah, public markets can be rough, but you guys have a great business model, so I'm sure the stock will start to take off soon.
At the end of the day, we just here to count the cash. And if the market doesn't recognize it, we can do spin-offs, we can do buybacks, we can do all kinds of things to
Yeah.
make sure value gets recognized. But we're optimistic. We're in a good area of the market, where demand is strong both for AI and for aviation. So, um, we're cautiously optimistic, and we hope you like the story as much as we do.
Yeah, definitely. We'll be following it. And congratulations, though, I think is in order. I mean, you started this from nothing, so it's really disruptive. And we're all rooting for you guys. And it's great to see how this has evolved.
Yeah. Well,
I
thanks
love
for
the
saying
software
that.
thing. The reroute is amazing. That's really cool. I didn't know about that. That's really cool stuff. So I'm going to read more about that.
Yeah. Yeah. It's one of my favorites. It makes a little map.
Yeah.
It shows you like a red line. That's what you want to do. A green line, that's what's going to happen if nothing else happens. And then a purple line or two, which is the magic.
Yeah.
It's very satisfying to use. You should tinker around with it if you have a chance.
Yeah, that sounds cool. Well, we appreciate your time and thank you for being here. And we'll check back as things go on the progress.
My pleasure, Joe. Thanks for having me.
Talk to you later. Have a great day.
Take care.